Hello and welcome everybody to today's live commodity market analysis with the Gold and Silver Club for the 18th of May 2017, presented by myself, Phil Carr. So today we will be going through, of course, live market analysis. We will go through a watch list of trading opportunities, a forecast of where we expect gold, silver and oil to be heading next, answering questions and of course providing live support as well. So just before we get into it, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For more information on the Gold and Silver Club and our expertise, please do visit www.thegoldensilverclub.com. Okay, so we've got lots to cover during today's session. So first of all, we'll talk about the VIX, the volatility index, which we have seen surge over the last 24 hours. In fact, over the last week, we have now seen an increase in volatility in the volatility index, up 24%. So we've seen a big surge in volatility after we saw VIX drop down to 20-year lows. So it's been a significant pop to the upside, and I'll discuss that in more detail on the chart very shortly. In inverse correlation to that, we have seen a pullback on stocks, most notably over the last 24 hours. We've seen a correction on the S&P 500 and certainly the Dow Jones. We'll have a look at the NASDAQ as well. I'm sure a lot of you are aware of that. We've seen several corrections in the stock markets. The big question is whether that will follow through or whether we're just going to see retracements and we're going to get a continuation of the upward trends. And I'll have a look at that in detail with you very shortly. Of course, off the back of the recent volatility that we've seen amid political turmoil in the United States, we have also seen gold surge up 2.3%, silver up 2.1%, and overall we've seen a number of commodities surge off the back of the US dollar as well, breaking down to 6-month lows. So with that, first of all, we'll have a look at the VIX volatility index, and this is just a screenshot of the VIX here. We track, and you can see big pop to the upside yesterday. So after breaking down to 20-year lows, we've seen a very significant pop to the upside yesterday, over a 25% move here for the volatility index. And of course, that's right back at resistance. And in fact, we can have a look at that right now. We can see right now we're getting a bit of a pause around this resistance. It's been quite a quick pop to the upside, which has essentially positioned the VIX back into oversold territory very quickly. Now we'll explore that further in more detail. As you can imagine, we've capitalized on that via gold position, silver position as well. So we've taken advantage of the breakout here in gold. It's interesting actually because we entered a gold position last week. We had confirmation to go long gold, and that worked out very well. A little bit of a slow start to gold last week. It had a number of tests of 1,220 where it couldn't close below that level. We kept on seeing it bounce off that critical underlying level of support, and certainly over the session last Thursday we had confirmation to go long. Friday, some additional follow through. The trade didn't really get moving properly until earlier on this week, and most notably within the last 24 hours, where we've really seen very significant movement here, big breakdown in stocks and also a big move to the upside in gold and silver. So we've capitalized on that trade. We've now closed the trade, 340 points profit on our gold position. We've got a silver position on as well, where we've taken partial profits. I'm monitoring that today to see whether we've come up to a very important point, whether silver is going to reverse off resistance or whether we're going to get additional follow through. So I'll bring you over to the chart. So first of all, and actual fact, on that note, I'll take you over to silver first. We can have a look at that. Now, what I found really interesting yesterday, silver surged right up to our key level that we were looking at here, which was $17 per ounce. And I've got quite a lot going on this chart. I've got raw charts as well, which I can direct you to. But for the time being, I'll take you over to this chart just because I want a little bit more detail in terms of where we could encounter some resistance here. And essentially yesterday we've seen this pop to resistance on silver. It's come up all the way up to the 21-day moving average, which is essentially what we were looking for when we entered the trade initially. But what we've seen over the last week is the 21 MA has slowly but surely continued to creep lower. And in fact, we've seen that provide quite a lot of resistance. Now, what I'm looking out for today, and I'll see, yeah, I can put this on a raw chart. Sometimes it's better just to show a raw chart rather than all the indicators, just to see the price action a little bit more clearly. So what you'll note at the moment is silver currently, well, after this pop that we've had to the upside. In fact, we'll just actually we'll have a look at that shortly on a weekly chart basis. But if we get a close below yesterday's low today, and we produce essentially a rejection candle yesterday, this will be a warning signal that actually we might get a continuation to the downside here for silver, and this isn't the move where it's going to bottom and continue the momentum to the upside. Certainly on a weekly basis, we were looking for some good follow through here. We were looking for a breakout after we saw silver come into very key support, found support also at the 76.4 Fibonacci retracement level, which historically has been very important for silver to hold on a weekly closing basis. It's given back over 75%. Last week, it gave back over 75%, essentially over the last 4 weeks of this move, where it rallied from the lows of January up to the highs of April, corrected 75%, found support at that level, produced a setup on a weekly chart. We've taken advantage of that. Fundamentals have supported that as well. And the US dollar, certainly the breakdown to 6-month lows this week. This is the US dollar where it's broken down very significantly over this week. Certainly has done some technical damage here, unless it can very quickly retrace between now and the end of the week if it has some sort of V-shaped reversal pattern snapback in price, because it is oversold. But if it maintains below the 98 level, we could get more momentum to the downside. That aside, we had an opportunity to take advantage of the breakdown in US dollar and take advantage of the inverse correlation with a breakout to the upside on both gold and silver. So if we move over to gold, this big pop to the upside yesterday, certainly we saw an additional inflow into gold from Tuesday night, really, is where we saw this big move to the upside. Decline in the dollar index has been attributed to political problems in the form of Trump also releasing classified information with Russian diplomats earlier on this week, which is another story which hit the headlines. Also, we of course also had the firing of FBI Director James Comey, which was last week as well, which has continued to provide additional weakness here for certainly the US dollar over the last week. And we have seen safe havens get bid up from that as well. It's caused investors to question whether Trump can push through some of his tax cuts and deregulation at the moment. A lot of the promises, which at the moment are looking a little bit weaker right now. Having said that, though, if we go over to the S&P 500, if we see the move that we had yesterday, we're starting to see a retracement here. So we had quite a down in price. And in fact, got a little note here as well. You can see the gap has now been filled on the S&P. So the gap that we had from the first round of the French election, the gap higher, we've seen the S&P 500 roll all the way back down, and it's now filled the gap. So that's quite important. So often gaps like that, they do get filled in the market, not always immediately. It's taken a couple of weeks here for the gap to get filled. Now, of course, the question is this a start of a much bigger correction taking part here, or about to take play with the S&P and several other indices as well? Also the Dow Jones, actually, it's interesting where it's finding support at the moment. We've seen the correction on the Nasdaq as well. Already we're seeing them get bid back at the moment. We haven't really seen this follow through. They're back at key support, short-term oversold as well. And watching very closely here to see whether this is just a very temporary pullback back to support, and whether we see this as a short-term pullback that then gets bid back into, or whether rallies are now getting sold into. Now, in terms of getting into this for a sell, I'd rather get a better price. I'd rather see a retracement back to resistance, which gets a failed move essentially, that gets sold into, then take advantage of a correction lower, just getting a better price on any sort of confirmation that this market is turning. But at the moment, if we were to form a rejection candle on the daily chart, if that follows through tomorrow, obviously it's early days at the moment. We've got about 7 hours left until the close, so this can change a lot over the course of the US session. But if we do see this continue to retrace, find support back at the 2,340 zone, then we could see potentially another retracement higher. So I would be watching this very carefully. Well, we are watching that very carefully to see what sort of confirmation that we get today. Yesterday's down move was quite significant. It was one of the biggest one-day moves to the downside since November of last year, and with that we have seen quite a significant move lower in just one day, but we could come into some support here. And you'll note that we've got quite a clear inverse correlation at the moment between the stock markets and the S&P 500 most notably, and also gold and silver. So where they both broke down, where we saw the S&P 500 break down yesterday, that inverse correlation was very clear, with gold breaking out, with silver breaking out. But now the S&P 500 is retracing, finding support today. We can look at the complete inverse correlation with gold, which is now selling off, giving back gains. It's back at 1253. As I mentioned, we came out of this trade already, so we are open to new trade ideas around this zone, which could lead to a potential correction lower here for gold. I'm not necessarily convinced that we're going to continue this move to the upside. We'll have to see. You can see short term we're overbought. Certainly this rejection candle forming on the daily chart. I've had a lot of questions at the Gold and Silver Club whether you should take this as an additional trade. The break above yesterday's high, the 1260 zone, whether it's going to run up towards the 1300s and so forth. And the answer to that is that we at the moment, buying at the highs there from a risk to reward perspective, not ideal. Unless you were already in the trade, you can trade up your stop loss or take some partial profits. But fresh entry at that level, not a good idea. You're at key resistance, which has been resistance going back in the chart to February and March. We have encountered resistance here again. We're pulling back. Now, it might be that the pullback gets supported. We're coming into this whole confluence of a number of moving averages, which are converging at a similar level, which is around the 1240 zone, possibly a pullback to that level, which gets bid back into. Could be an opportunity to buy, or we're just going to see it roll over. But you have to remember, a lot of this sudden move to the upside on gold and silver has been off the back of quite a lot of political turbulence. And if that calms down in the background, if we see that start to fizzle out over the next couple of days, then we could start to see a correction lower again with gold and silver. And I'm still not ruling out the possibility to see another move lower in anticipation of the FOMC statement, which is going to be approximately a month from now on the 14th of Wednesday, the 14th of June. So we can normally, ahead of that, we do see weakness in the precious metals in the lead up to that. Obviously, that's another month away. So we've still got time to see how this price action plays out. But we have come into resistance here around the 1260 zone for gold. Watching now for the next entry, really, to see what plays out next, whether we're going to just get a resolution and see just this roll over back towards the lower end of these support channels, or whether this is just temporary and we see a resumption of this upward trend. Just moving over to silver as well. Silver looks a little bit more ropey here. I was actually looking for this sort of a move, short-term retracement higher, coming back towards retracement levels, 21-day moving average and so forth. The 17 level was quite key resistance. We hit that level spot on yesterday. This is moving quite fast now, 1663. So this is a raw chart. Can put it on a more detailed chart. We're coming back into underlying support. If silver takes out this previous level, so if we come back and take out the 1660 level and we essentially produce some sort of bearish engulfing candle today, I would suggest this could start to roll over and silver is done for this retracement, and we could start to see a bigger corrective move lower. So I'm watching out for that at the moment. So, but it's not confirmed yet. There is the potential for a bear flag formation in development here as well. So we'll see how that continues to develop today. So break below the 1660 zone could lead to another wave lower here, shallower high on this retracement. I mean, silver got seriously oversold, and it's just, in my opinion here, we are seeing this this retracement also from a very oversold condition. So it was expected. It was expected to get some sort of a bounce at this level, but we'll continue to monitor that to see how this price, excuse me, how this price action continues to develop. The US dollar index here as well, I'm watching carefully around the 97.50 zone. It's at a level where it's certainly short-term oversold. Whether we get some sort of snapback in price from here, I'm watching that carefully. If we do see a retracement higher, that could also mean that we do see more weakness in gold and silver too. So we'll continue to monitor the correlations there as well. Platinum also had quite a sizable bounce as well. We'll just go over to platinum. So we had a bounce from the 880 zone to 900 zone. That's been very supportive, actually, going back to the swing lows of December 2016, where we saw strong rally alongside gold and silver. Platinum, actually, alongside silver, was one of the best performing markets up until February. We've corrected lower. We're actually also just over the last couple of hours, we're seeing retracements here back at overhead resistance, back at the 50-day moving average, pulling back at the moment. Now, platinum does tend to ebb and flow a lot during the day. You can't really make a decisive call on this until we do see the daily close, because it could be that we just see support into the close. But if it breaks back below the 925 zone and forms a bearish engulfing candle, we could just see further selling pressure. And again, I would suggest then we've actually got a bear flag set up and we're going to see additional pressure to the downside. So I would watch out for that potential move lower there as well. Now, moving over to oil. Oil's price action has been very interesting actually today. We've of course got the OPEC meeting, which is coming up now next week, which is going to be next Thursday. And we saw quite a strong move earlier on in the week on Monday, back of Saudi Arabia, Russia, essentially in agreement that they would increase the current output cuts by 9 months instead of 6 months at next week's OPEC meeting. And we saw certainly a 3% move on that on the day. So on Monday, we saw a significant breakout higher. You can see here in actual fact where the 200 MA is definitely in play here. We've seen that provide resistance all week. And it's interesting because the 200 MA and the 50-day moving average both confluence at around the same level. That's certainly providing rejection here. We've seen that 3 days in a row now, Monday, Tuesday, Wednesday. But we are also finding underlying support at the 48 level. I would suggest we might stay range bound between $48 to $50 per barrel in the anticipation of the OPEC meeting next week. Downside seems limited at the moment, but there's no catalyst right now to actually cause an additional surge to the upside unless we see any other breaking news in anticipation of the OPEC meeting, any more additional agreements, especially on the output cut side, which could cause further upside momentum. We seem to be nearing certainly the $50 per barrel level for US oil. So I suspect we'll see continued consolidation, ricocheting between $48 to $50 per barrel over the course of this week into next week. If we get a decisive break and a close back below $48 per barrel, that would suggest we could have a further correction back towards 47 to 46, which has been underlying support. I find the price action really interesting here on the weekly chart as well, going out to higher time frames. In fact, I'll take you out. First of all, we'll have a look at the higher time frames here, the weekly chart for US oil, and then we'll bring it over to Brent crude oil as well. So US oil, you can see where over the weekly chart we've had certainly significant support here, and you don't want to just use these levels to make trading decisions. You want to bear in mind all the fundamentals research, bear in mind seasonality and cycles, and also the upcoming OPEC meeting. But when we are looking at technicals for profit targets and entry exit zones, it is noteworthy the bounce that we're getting at the moment, where we've had support going back to 2016, several bounces, underlying support. We've retested that, and the question here is this a good buy kiss? Are we just going to come up, retest previous support, term resistance? Is this it? Is this how far the OPEC deal is going to be able to take oil? Is it only going to be able to come up to the $50 per barrel level and just resume the downward trend from there? Have OPEC, are they able to produce any other meaningful agreements that will cause an additional upside move for oil? If not, we could be capped around $50 and see another resumption down again, a good buy kiss or previous support, which turns into resistance. So I would watch out for that, which could play out on oil here. And that is a US oil. Also, most notably too, is Brent crude oil. We'll just take that back for you to Brent crude oil, which is the UK oil. Similar situation on the daily chart, but again, if we go over to the monthly and the weekly, what I find interesting here is, although the weekly, and you can see it's slightly stronger on Brent than it is on WTI crude oil, although we've done technical damage on the weekly chart, and to a certain degree we have taken out major support on the monthly chart, if it closes back within those channels, which we're into the 18th of May at the moment, obviously about another couple of weeks until we close out properly for the month in terms of the chart structure. If it closes back within this zone, big rejection candle on the monthly chart, and we get additional follow through, well, then we could then argue that we're going to see a resumption of the upward trend. But it really is dependent on, to a certain degree, short term anyway, the OPEC meeting next week as well is probably going to be a catalyst for the next large move here for oil. But that is noteworthy, the fact that although we've done technical damage on Brent crude oil in terms of major zones, we are closing. It looks like we could develop a close on the monthly chart back above this underlying level of support as well. Okay, so that's worth bearing in mind. Also on lower time frames, I've had a few questions on this over the course of this week, and yes, oil certainly at the moment has been quite useful to trade this on lower time frames as well. This capitulation move that we saw going back to the earlier part of May, around the 5th of May, this follow through move that we've seen to the upside has created a number of bear flag formations on lower time frames. to take advantage of this move. You've got a classic V-shaped reversal pattern here as well. If we take that out to a daily chart and take off some of the indicators here, you can see the capitulation, V-shaped reversal pattern. This was the capitulation move. It chopped about with the following couple of days afterwards after we saw the capitulation, but then we've had significant follow through now over the last week, where it's been over a 6% move to the upside now for oil since it broke down to the lows of 43 US dollars per barrel. So it's been quite a fast move, but we're still capped a little bit here between 48 to 50 dollars per barrel, but certainly pullbacks back to 48 have been bought back into, and we've got serious overhead resistance of $50 per barrel at the moment as well. So we're within that tight range. But again, next week, next Thursday will be the OPEC meeting, which we'll be delivering a session as well next week, this time next week, so we can have a look at that. We'll probably have the results out by then from the OPEC meeting. So we can definitely discuss that on next week's session as well and see what sort of impact that does have on the prices as well. With that also, you can just bear in mind the inverse correlation that we're seeing at the moment with the breakout on oil here too. Also seeing that inverse correlation play out to a certain extent on US dollar, Canadian dollar, which is rolling over, commodity currency, which moves inversely to oil. That's been rolling over the last week. Got some key support just below. If we can take out the weekly lows here, we've got quite a lot of clean air for a breakdown lower on the commodity currencies as well for US dollar, Canadian dollar, which will move inversely to oil. So oil breaks out, US dollar, Canadian dollar will very likely break down, being a commodity currency. Canada, one of its big exports is oil, and it's got strong correlation to oil as well. So with that, guys, I will bring you back over to the presentation, and I think that's it just in terms of the major markets we're covering today. Gold, silver, oil. Gold, you can see it's starting to pick up some momentum to the downside here. 12.52 now. So if you're trading gold, oil, just be nimble. That's the name of the game at the moment. Be nimble. Trump's taken to Twitter again today, and he's been quite active. So we're seeing the S&P 500 getting some support at the moment. It's retracing back quite quickly on lower time frames. You can see it better, the retracement higher that we're getting at the moment. So just keep an eye on that. And yeah, I wish you all profitable trading today, guys. Of course, if you enjoyed today's analysis, you like this on a more regular basis, you want to join our live trading rooms during the week, and you want to join us and find out about all of the trades that we are taking at the Gold and Silver Club, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we'll get in touch with you ASAP. So what do you get by being a member? Well, essentially you get access to our live trading room webinars during the week. So we go through the markets, commodity markets. We talk through open positions, new positions that we're looking at, exact entry, exit, take profit levels that we have. We go through trade management, regular updates on all of those as well. You get trade notifications via email and SMS, which is super handy. So real-time notifications every time there's a trading opportunity, every time we enter a trade, exit a trade, trade management, major updates in the market. You get updated 24/7, which can save you a lot of time. A lot of the time, especially if you're in front of the screens a lot and you trade a lot, this will possibly give you additional confirmation on what you're already looking at. If you've got a really busy lifestyle, you don't have a lot of trades, a lot of time to trade, this takes a lot of the time out for you. So it means that you can trade with just a very short period of time. Receiving notifications and alerts can work really well around a busy schedule as well. You get access to our commodity research, our market insights, so you get exclusive access to our proprietary trading research, market insights to help boost your win rate and help you get on the right side of trades. That research is really there to give you a very strong edge with your trading. And of course, you get access to our live trading rooms during the week, trade setups ready to implement, real-time notifications via email, SMS, details of where we are entering, exiting, placing a stop loss. You get our weekly trading plan every single week with the watch list of trades for the week ahead. Live trade support to help you through each trade, institutional level trading research, commodity insights to help give you an edge in the markets. And of course, we set you up with everything that you need to successfully trade commodities. So again, if you would like to join the Gold and Silver Club or get in touch to find out more, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, guys, wish you all good trading, all the best. We'll definitely catch you back here on the next one, and very much look forward to hear from those of you who will be making application and joining us at the Gold and Silver Club. Okay, great stuff. Thanks, guys. We'll speak to you real soon. Take care, everybody. Bye-bye.